Hello, I'm Jeff Tackney.
And I'm Jen Tackney.
And we're
Team
TeamTackney.
And I'm Josh Atwood with Finance of America Mortgage.
Today, we are going to do FHA closing costs explained. What does that mean? What are FHA closing costs, Josh?
Let's get right into it.
Let's do it.
So when it comes to closing costs for purchasing a home, there's essentially two types of closing costs you're going to be looking at. You're going to be looking at reoccurring and non-reoccurring. So just like you would think, a reoccurring closing cost is something that happens over and over. A non-reoccurring is something that happens just one time. So some of the non-reoccurring closing costs are going to be your third-party fees, your escrow, title, appraisal, lender fees. So those are just one-time static fees that you pay at closing. When it comes to the reoccurring closing costs, those are going to be things like prepaid interest, prepaid taxes, prepaid homeowners insurance. So these are things that as you own a home, part of owning a home are paying property taxes. So during escrow, there's going to be some of those collected. So those reoccurring closing costs are going to factor in as well. When it comes to closing costs specifically for FHA, there's essentially one big difference between the two. So you guys have heard of mortgage insurance, right? So
yes, and I have to interrupt. I can't take it anymore. You know how I like to talk so much, Josh. So some background real quick. We've worked with Josh since 2010-ish, forever. It's 2022, 12 years. When you said recurring and non-recurring closing costs, I thought about when we used to actually ask sellers to pay for
good old days.
recurring and non-recurring selling costs. Yes, the good old days. So the recurring, they would do that because they wanted that credit to cover HOA, all of that stuff. So at some point, as we see this market shifting, we may get back into asking sellers to help buyers with closing costs again. So I got really excited, and I had to just talk about the fact that, wow, I hadn't heard recurring and non-recurring closing costs in 5 years.
yeah.
Ish. It's been since we've asked a seller to pay for closing
And now we
costs.
know what excites Jen Tackney.
Yeah, I love it. I love getting, negotiating.
Yes.
Negotiating excites Jen Tackney. So, and I can't speak about myself in the third person because that bothers Jeff Tackney a lot. So back to mortgage insurance. No one really knows what mortgage insurance is. I think only the older, experienced home buyers know what mortgage insurance is. So what is it, Josh?
Yeah, so essentially mortgage insurance is a policy that you get if you're putting less than 20% down. So if you're putting 20% down on a transaction, then the lender considers there to be enough equity in the property that they do not need any insurance. Mortgage insurance protects the lender in the case that the borrower defaults on the loan. So on a conventional loan, and the reason I bring up conventional is because a lot of times buyers are going, well, should I get an FHA loan or should I get a conventional? And I think there's a great video on this channel that really breaks down the differences between getting a conventional loan and getting an FHA loan. So we'll save that for later. But assuming that you're getting a FHA loan, there are two types of mortgage insurance to consider.
Okay.
So you're going to have upfront mortgage insurance, and then you're going to have monthly mortgage insurance. And so the biggest difference between closing on an FHA loan and closing on a conventional loan is going to be that upfront mortgage insurance premium.
Okay.
The upfront mortgage insurance is 1.75% of your loan amount, and you have two options with it. You can either finance it, meaning add it to your loan amount, or you can pay for it upfront. So when you're looking at getting an FHA loan, you have to consider that additional 1.75% and how that's going to be factored into your closing costs.
Gotcha.
So yes, because I had misunderstood that you're going to still have the monthly mortgage insurance and the premium. Whereas
Exactly.
If conventional, if you're putting less than 20% down, you're just going to have the monthly.
Correct.
No extra premium. So there's a little more fees with FHA closing costs, and then there's that benefit that you mentioned, the bigger availability for financing and better rates sometimes and things like that make going FHA more sense. And hopefully we can get the sellers at some point to help pay that 1.75% for the mortgage insurance premium. That'll be great. So that's about it. So that's the difference.
Yeah, that's
for
the biggest
FHA.
difference. I mean, typically when you're adding that in, it does go into your monthly payment, but typically you're able to absorb that pretty easily. So most of our clients are financing that upfront mortgage insurance.
Oh,
And then once you get to that 20% equity position in a home, can that fall off?
So the FHA loan, the mortgage insurance is for life.
Okay.
So as long as you have that FHA loan, then you're going to be paying mortgage insurance every month on it. A lot of our clients who purchased a year or two ago, they're in a position where they have that 20% equity. Now we're looking at opportunities to refinance and take them out of that FHA loan and put them into a conventional loan where they no longer have to pay that mortgage insurance. But if you stick with the FHA loan and you continue to have that, even if you pass that 20% threshold, you're still going to have that monthly mortgage insurance.
Good to know.
it's great to know. Well, thank you so much, Josh.
Yeah,
We
thank you.
Appreciated your educating us on FHA closing costs. If you've enjoyed this video, please give us a like and hit subscribe below. We'll see you soon.
Bye for now.
Bye.